Utah might be the best insulated state when the oil shock hits America. Thousands of people are moving here each year, and the economy is booming. It has a rare combination of natural beauty, tourism, a growing tech sector, and relatively disciplined fiscal leadership. It was one of the few states that actually had a budget surplus in recent years.
The state is even investing in long-term energy independence. It's not without risks. But given the current global financial environment, here's why Utah could be one of the best places to invest over the next decade.
To understand what's happening locally, you have to zoom out globally. Right now, the biggest forces shaping real estate aren't local, they're global. Start with energy. When geopolitical tension rises in the Middle East, oil markets react immediately. Even the threat of disruption pushes prices higher. Shipping becomes more expensive, insurance costs rise, supply chains tighten. And when oil goes up, the cost of almost everything goes up with it. Now think about countries that rely on imported energy. Japan, Europe, South Korea. When oil prices spike, they suddenly need more US dollars to pay for energy, so they raise cash. And one of the fastest ways to do that is by selling US Treasury bonds. But when many countries sell bonds at the same time, bond prices fall. And when bond prices fall, yields rise. Which means the US has to offer higher interest rates to attract new buyers. Now you have two forces pushing rates higher at once: inflation from energy and rising bond yields. And that brings us to housing. Mortgage rates are tied to Treasury yields, so when yields rise, mortgage rates rise too. At the same time, higher energy costs make construction more expensive. Materials cost more, transportation costs increase, labor becomes more expensive. So builders are squeezed from both sides, higher borrowing costs and higher construction costs, which leads to fewer homes being built and tighter supply. Higher rates, higher costs, lower supply. That's the squeeze. Now bring that back to Utah. Utah isn't immune to these pressures, but it is positioned differently. The state continues to see strong population growth, a younger demographic, and consistent housing demand. Its tech sector, often called Silicon Slopes, continues to expand. Utah has also maintained relatively strong fiscal discipline and has run budget surpluses in recent years. At the same time, the state is exploring long-term energy strategies, including nuclear development. Utah also benefits from a uniquely stable and organized community base, with the LDS Church headquartered here. The church has been reported to manage tens of billions in long-term reserves, supported by a consistent tithe-paying membership. While that capital isn't deployed as a direct economic backstop, it does reflect a level of institutional stability and long-term planning that can reinforce resilience during economic downturns. But when you step back and look at the full picture, global pressure pushing rates higher, combined with local strength, Utah stands out. Not because it's immune, but because it's resilient and relatively insulated. The question is, which markets can handle it? Utah just might be the most prepared. If you're a first-time homebuyer, or you're looking at investing, there are actually some really strong loan programs and strategies available right now, specific to Utah. Most people just don't know about them. So if you want to run the numbers or see what might make sense for your situation, reach out to me. I'm happy to walk you through it. And if you found this helpful, like, comment, share, and subscribe for more breakdowns like this.